Flipping houses or renting property, which is the best strategy? Well, you can flip houses for chunks of cash, or you could rent for cash flow forever. Which is going to be the best one for you? In this video, I want to break down so you can decide which is going to be the right one for you to use. If you're watching my videos for the first time, my name is Hussain, and on this channel we have 3 videos a week to ultimately help you get further faster in your property investing journey. When I started out in property about 15 years ago, I had this dream and this aspiration about I'm going to buy properties, renovate them, sell them. I've been watching Property Ladder, I've been watching Homes Under the Hammer. I thought this is going to be easy. How hard can it be? And I thought we're going to be rich within a year. But then reality struck in and I realized actually maybe it's not so easy. You have to find these properties, you've got to find the right ones, you've got to renovate them with the right people on board, you'll be able to get the figures right at the end to be able to sell it. But then I thought maybe renting properties is for me. And as I was finding deals, I started partnering with other people and we started buying single let family houses to rent out. And I'd get my share of the profit, about £47. And I'd be thinking, I'm going to need a lot of £47 before I'm going to be able to say I'm comfortable. So how do you work out which is the right strategy? Is it flipping houses or is it renting them? Well, let's break down the advantages and disadvantages of each. When it comes to flipping properties, what are the key advantages? Well, the biggest one is you end up with a chunk of cash at the end of it. That's what everyone aspires to. You do the deal, you buy the property, you add value, you sell it on, and you've got a chunk of cash at the end of it. Hey presto, nice and easy. Well, there's a number of factors that you need to look at in terms of before you get to that point, but that's really what people are aspiring to do. And in terms of the size of project, that can vary. It can be a very, what we call a light refurbishment, which means really a lick of paint and some fresh carpets in the property. And so you're adding a little bit of value and you're selling that on for a profit. Alternatively, you can go all out, gut the property, do a major renovation on it, extend every possible side you can extend from, make it more square footage, modernize it and add significant value to be able to sell for a much bigger profit at the end of it. So either way, you're walking away with a huge amount of profit. And also it means you literally are walking away because once it's sold, there's no more to hear from that property, no issues. No one's going to be ringing you up, complaining about things. It's done. Whoever's purchasing, they'll do their own due diligence on it and that's it. You do the work, you get paid and you move on. That's a great thing about flipping properties. The amount of money you make from flipping property will also be dependent on the number of deals you can do. So you can do a few deals, which are bigger deals, or you can do lots of small ones. So for example, if you're doing light refurbs, you can turn them around quicker, you take the profit and move on, or you might be doing bigger ones where you got much bigger profit, but they take much longer to do. So I did a video not too long ago. In fact, it's got more than 100,000 views on the channel now. We'll link it below for you to have a look at, where we took a simple 2-bedroom house and we turned it into this 4-bedroom, £400,000 house. And there was a massive uplift in value. Yes, we've done a substantial amount of work to it, but the key thing was it was in the right location. We understood what the ceiling price was and what we could smash that up to in terms of being able to achieve the end value, the end figure of that. So remember, when you're starting with flipping properties, it's thinking about how much money you want to make and looking at the right type of projects that can be able to give you that return. Lots of small ones or maybe fewer big ones. When it comes to renting houses, or some people call it the BRRR strategy, which is essentially buy, refurbish, rent, refinance and repeat that process again. When it comes to that specific model, here what we're doing, we're creating income on a monthly basis that's reoccurring. Reoccurring for how long? Well, reoccurring pretty much forever if you hold on to these properties. And that's really the power of this particular strategy when it comes to renting property. It's you're building wealth for the long term. In fact, it'll probably outlive you and it becomes generational wealth. When you look at, say, the Sunday Times Rich List, the most money is either made or kept in property. And it's not necessarily even in one generation. It could be several generations that's actually that money's passed down to. So some of the wealthiest people in the country that have made money through property or hold wealth in property, it isn't necessarily even something they've made. It could come from their parents or grandparents. In the same way, you could build this wealth for your kids or your grandkids. And hey, if you're thinking you ain't building any wealth for anybody else, you can spend it all, well, you can do that too. It means at some point later on you exit out the strategy. But the key thing here is you've been able to acquire assets, you're creating a monthly income, you're repeating the process and you continue to go forward on that basis. Often people will use this strategy initially on a part-time basis. That means they might have a day job and they're doing this little bit on the side, a little bit of a side hustle. They'll purchase a property, become a part-time landlord, maybe with one property, then a second or third. They start building their portfolio up in that way. In fact, when you look at the analysis in terms of the number of landlords in the country, the vast majority actually only have one property because they don't necessarily understand how to scale. But if you do this model correctly, what it means is you can build up quite a substantial portfolio applying this particular strategy. The great thing is it doesn't take a huge amount of time to get started, get it up and running, and then you hand it to somebody else to manage, i.e. the letting agent, and you're collecting a monthly income, i.e. the passive income every month. Now earlier I mentioned when I was first looking at this, I was making about £47 a month, and I was thinking, heck, this is going to take me a long time to get anywhere. However, over time I've realised there's different ways to do this, and most of our properties now cash flow over £1,000. How do you get over £1,000 from a single house? Well, it's because we will multi-let them, we'll run them as HMOs. That means we have several people living in one house, paying multiple rents as opposed to a single rent. So we are able to achieve much more from a single house. But the principle is the same. We're buying the property, we're refurbishing it, we're renting it out to several tenants, we're refinancing it, repeating the process, and we go again and do another property. And in fact, if you like that kind of thing, we'll make sure we'll link a video below for one we've also done recently and just completed as well. And we show you how we did that. There are two more advantages with this strategy. The first is the certainty of exit. What do I mean by the certainty of exit? Well, actually, when we do a strategy like this, we need to come out the other end, and we need to be sure we can come out the other end. With buy, refurbish and refinance, when it comes to the refinance, effectively what happens, the surveyor is going to come in, they'll value the property, you'll take a new loan on that property, and you can fairly accurately be able to work out what those numbers are going to be, and you're going to be fairly confident in terms of what kind of rent you might be able to achieve. You might be out a little bit, but generally speaking, you'll be fairly close to the numbers as long as you do your research correctly in terms of what that's going to be. So you've got the confidence of what you will need to be or where you need to be to come out of that particular deal. And when you come out of it with the cash that you do come out of it, what that means is that cash is tax-free. Why is it tax-free, I might hear you ask? Well, the reason it's tax-free is because really it's more debt. What you're doing is you're borrowing money. So when you take a loan, say from your bank, and they send you £20,000, they put it in your account, you don't pay tax on that money. But it's money you've just had. The reason you don't pay tax on it because it's debt, you borrowed it. In the same way, this is debt. The advantage is you're increasing the debt on the property and it means you're not paying any tax. Now, some people see that as a disadvantage, but actually what you're using is the power of leverage. Before we talk about the disadvantage of each strategy, make sure you watch all the way to the end because I'm going to share with you what I would do if I was starting again and I had a choice of these two strategies. And if you're enjoying this content, make sure you smash that like button, subscribe to the channel and enable the notification bell so you're notified when YouTube releases videos just like this for you, i.e. my videos that you should be watching every Monday, Wednesday and Friday. One of the biggest challenges with flipping property is the slow payday. It takes so long to get paid. Why does it take so long to get paid? Well, you've got to purchase the property, you've got to renovate it, then you put it up for sale. Well, you can control the first bit, you can control the renovation, the time frame there, and then when it comes to sell the property, you're relying on the agents, those wonderful people that have got to find you a buyer and be able to get it through to completion. The unfortunate thing is, sometimes you get a region of between a quarter and a third of buyers will fall out of bed. So that means when you see a property sold subject to contract, some of those won't actually complete. They'll fall out of bed and you've got to start again and go back to square one. And this happened to me this week on a property, which is so frustrating because the buyer's got several months into the completion stage, i.e. getting to the purchase, and then they decide for one reason or another they want to pull out, and they're absolutely within their right to be able to do that. But as a seller, this is really frustrating because that means you're stuck, you now need to go back. So the uncertainty in this strategy is the biggest problem. You can control a lot of the early parts, but the end bit you can't. How long it's going to take, what's the figure you're actually going to be able to achieve, are you going to have any issues during that time? So these are the problems that you'll face when it comes to flipping properties. Challenges that you're facing when you're new to this particular strategy is if you need the money right now, how are you going to survive for months and months before you actually get paid? So people will sometimes talk to me and say, hey, I'm going to be flipping properties, I'm giving up my job, I'm going to be doing this full time. I think that's great. But how are you going to feed yourself for the next few months while you're waiting to actually get paid? Because there's going to be no income coming in. You've got no money coming in. You're going to get paid right at the end when that sale happens. So you need to be able to support yourself for then. And if you're doing smaller flips, i.e. you're adding little amounts of value to them, then you can have smaller profits. If you're doing big flips, they can be much more riskier because it requires much more experience to be able to deal with issues that might come with the properties. And you may have heard the term, everything seems to take longer and cost more when it comes to renovating property. And hey, this also applies to BRRR when you're renovating properties, but the risks are there. It means there's some uncertainty of costs, of timings, you've got to build some buffer in. But the biggest challenge when it comes to flipping property is the uncertainty of exit, as I mentioned, because the market can change completely. So for example, you might have a slowdown in the market, there's less buyers, you might even have a price drop. And if you're working on a small profit margin, and let's say there's a drop in house prices, where's your profit gone? It's evaporated, it's gone. That means you've done all that work and you've got nothing to show for it at the end. Now also, considering how much is it going to cost you to purchase this property, where's that money going to come from? So you've got the purchase price, you've got renovation costs, you've got holding costs, all this money needs to come from somewhere. You may be in a fortunate position where you're starting off with some of that money, which is great. Often people will use other people's money or bridging, and if you're using bridging, you've got to build that cost into it. Let's say you build the bridging cost in for 9 months. I was speaking to somebody yesterday evening and they were looking at 9 months, but actually what it turns out to be, it's going to take longer. Now their bridging costs are extending, they've got to pay more to extend the bridge, and their cost is actually increasing as well. So overall, all this is eating into your profit. So the timing of these strategies tends to be one of the biggest challenges. With bridging being so expensive when it comes to doing these type of deals, you've got to build that cost into it. And I know some people will use mortgages when they look at flipping properties. The reality is that's the wrong product. You really shouldn't be using mortgages because they are long-term loans. And flipping is a short-term strategy, i.e. within a year, you should be probably exited out of it. And your mortgage might be, say, 20 years. And sometimes when people are using that method, what they're doing, they're being dishonest with the lender in terms of what their intentions are with that mortgage. Our preference is to buy for cash. So where do we get all this cash from? Where does this endless cash come from? Well, the way we buy for cash is we work with other investors work with us and fund those deals, to refurbish those deals as well, and we share the profit on that. That tends to be my preference, and that's how we tend to do this particular strategy. When it comes to renting property, what the challenges we face there? Well, the biggest problem and challenge is tenants. It'd be an amazing business if it wasn't for tenants. Well, there would be no business if it wasn't for tenants because they're the ones who are going to be paying you each month. Okay, maybe I'm exaggerating a little bit. You know, we've got hundreds and hundreds of tenants, and it's not often that we have huge problems. You know, if I think about my worst situation, well, it cost me about £15,000. I am not bitter. I'm still learning to let go. I'm okay. I'm getting a lot better than I used to be when it comes to getting frustrated with tenants. But the reality is tenants can sometimes take advantage of the situation. They might not be paying the rent, they're causing damages, the eviction can take so long, and all this can cost you a horrendous amount of money, all because you've got a tenant that may not have been the right person for that property. And you're limited in terms of your hands are tied, what things you can do from a legal perspective, because the law is heavily sided in favor of the tenant. And this is what frustrates me, but you know, it's part and parcel of business. If you run your business well, that means that you will minimize these problems. But these are some of the challenges that we face when it comes to renting property and dealing with tenants and management. Now, even if you hand it over to a management agency, the reality is you're still going to have to manage the managing agent. And if you're dealing with the tenants directly, you've got the issues of managing the tenant and the property as well. So it becomes time consuming, and you're making a small profit each month for all that effort that you're putting in. When it comes to this strategy, you're making a small amount of money over a long period of time with the intention to get super rich over time, because the reality is house prices just go up and up and up over time. Now, we don't know for sure whether house prices are going to be significantly more than they are today in years to come, but if we look at things, what's happened historically and generally what's going on in the economy, it's very, very likely prices will be much, much higher than they are today in years to come. And that's why we invest in this strategy for the long term. However, the government have also realized how much potential there is and how much money you can make through property. So they're absolutely clobbering landlords with taxation, and such as Section 24 that happened recently. So many people are now trying to change and restructure their businesses. Those that have been in this business for a little while are really getting hammered in terms of taxation in a very, what I believe is an unfair way. But going forward, landlords have now restructured their businesses. That means that they cannot get penalized in this particular way. Now, if I was starting again and I was looking at these strategies and I was thinking which would be the right strategy for me, well, actually what I would do is I would use both strategies. And the reason I would use both, because I see them as complementary, and this is really how I built my business. And the reason for that is what I would do is, first of all, if I started from scratch, I'd think about three key things: how much time I have to invest in this business, how much money I am starting with, and also what skills I'm bringing to the table in terms of what for example, you know, it may be you're quite handy doing some work yourself. It may be you're great with managing people. You can get other people to do these trades for you. It may be starting with a good pot of cash. That means you can leverage that and be able to grow quickly. or it may be that you've got other people's money that you're going to bring into the deal. So think about what are the things you're starting with. Also the location, where you're based in the country. The strategies will vary slightly. If you're in some rural location, you really need to think about who's going to be renting that property from you, or if you sell it, who's going to be the buyer. And in some places, one market is much stronger than the other. So it's not necessarily what you want to do with it, it's what the market determines and drives as to what the interest is for that particular type of property, so you know what you can do with it. And particularly when you start getting to the bigger properties and the bigger profits from flipping, those properties don't really work well for rental because you're tying up so much money and you're not really getting the rental return you want. Ultimately, for me, it's about return on capital employed. So what I mean is how much money we're putting in versus what return are we actually getting from that. So when we talk about these two strategies, really what we're doing, we're flipping properties, we're taking chunks of cash and we're using that to purchase properties to keep. So it's a balanced portfolio. One of us is building us cash and the other one is building us cash flow for the long term. I'll be really interested to know which strategy you think is the right one for you, particularly after watching this, and which one you're following and why you're following that particular strategy. Whichever strategy out of the two you decide to do, the ultimate outcome you want is to make money from property. But here's something that's really important that you need to consider. Whichever strategy you want to look at, it's really important that you speak to a property tax accountant first so you get the right advice in setting up the right structure. Because it's great making all this money, but ultimately you want to keep more of it in your property and not get battered and clobbered by tax incorrectly. And this is not about avoiding tax, this is about paying the right amount of tax that you need to for the type of structure you got. And the reason people are mismanaging their investments is because they don't really understand the taxation. They leave it till later on. They get started and then a year later they say, let's go and have a word with the accountant in terms of how we're doing and what we need to do going forward. And by then it's too late because you've already set up the business in a certain way and you've incurred those particular taxation on those projects. So it's important you speak to a good tax accountant before you get started. And if it's something we can help with, reach out to us as well. So here's the thing, if you enjoyed this content, make sure you share this video with at least one other person. Subscribe to the channel as well to get more great videos just like this. And I look forward to seeing you again on the next video.